Did you know individuals with low earnings aren't usually the one who borrow the most money? Most money making individuals know how to use debt as leverage to gain a lot of benefits. That's why in this video, you will discover some of them, using debt in powerful ways to your advantage. Basically, if we hear the word debt, we commonly see it as a terrible thing, believing that borrowing money is actually robbing your future self of money. Something that people only do when they don't have enough income to buy what they need. But debt isn't always bad. Looking at our current economy, we can see it take a major role since everyone nowadays uses it. From investments in businesses and credit card loans to car loans, we can see it everywhere. Pennywise, the channel focuses on exploring wealth and increasing savings through life-changing practices about personal finance, money earning and management tips, avoiding hoaxes, and so much more. Our goal is to equip you with a penny-wise mindset through your journey to fund and help you experience the life you desire. We aim to provide 5 videos per week and strive to make these videos as amusing, educational, and fun as possible. So please join us on this exciting adventure by clicking the subscribe button below. Although borrowing money has become part of our lifestyle, how you use it is important. Some people can take on opportunities to gain more income, and some will misuse it, letting debts eat them with high interest rates, gaining what we call bad debt. Examples include personal car loans, student loans, and credit card shopping loans, which might burn a hole in your wallet once it's time to pay up. The idea that debt may be beneficial is hard to understand since we only imagine having loans like the ones we mentioned. So, how can it be beneficial? Number 1. One of the most common tactics that individuals utilize debt to build their wealth is through real estate. It provides the investor acquire ownership of houses even if they do not have the funds or fortune to pay for these properties. Wise investors own these properties to fix them, making them more appealing and attractive with the purpose of waiting for the right increase of the property to sell it. Imagine finding and buying a $150,000 house and lot and fixing it with a $25,000 to $40,000 construction bill. After waiting and waiting, you went to get the property reassessed and it was sold for $300,000. From that, you have already doubled your profit from $150,000, and you simply allow the buyers to pay for the debt. Plus, you gain the profit of $160,000 minus the interest. Do you have an experience in real estate? Have you ever used a method like this before? What were your biggest deals made? If so, would you recommend other people to have a job in real estate? Comment down below what you think. Number 2. Turning debt into assets. An asset is a valuable resource that a person, company, or country possesses with the hope of future profit. You might be asking if debt is putting a person at a disadvantage in the future. Isn't it hopeless to turn it into an asset? Examples of bad debt were mentioned earlier. So what are examples of good debt? When you take car loans and the car you're currently buying does not make money, it is bad debt. Since you still need to spend on occasional repairs, gas, and maintenance, it can be turned into a good debt if you're allowing someone to rent it and put money in your pocket. For instance, if you allowed your neighbors to use it for 1% of the full price, after 100 times renting it, you're already letting them pay for the interest of the loan. The same can be said in houses and apartments on credit. By leasing them, you can create positive cash flow and also accumulate money to pay for the borrowed property. Student loans were mentioned earlier, although it is considered a good investment for the future. However, it does not currently create any profits like the credit cards for shopping, which is why it is bad debt. learning how to use properties or resources to produce a positive cash flow, even though when their credit is the key to principal gaining wealth. Without applying this skill, you're currently drowning yourself in years and years of payments. Number 3, seeing debt as a backup resource that can help us grow. In businesses, for example, if you already have a company, you can borrow money to expand the business by having more branches, hiring and training more workers, creating new and innovating old products, or even buying the necessary supplies for your products. You can put them on credit if you don't have the necessary funds to pay for them. Steve Jobs, for example, during the first days of Apple, the multi-trillion-dollar company today, they received their first order of roughly 50 Apple I computers from a store called ByteShop. Since they didn't have the computer parts and the money to pay for the parts, he ordered the parts in credit to be paid in 30 days to be able to fulfill their first order, even showing the order receipt as proof. They secured the $25,000 payment from the shop and paid $20,000 for the computer parts, having $5,000 US dollars profit. However, today, in starting a company, experience is significant. Therefore, taking loans for a new business is not recommended for the inexperienced. You might put yourself in a trap by paying debts for an unprofitable business. But similarly, whether starting a business or not, it can be viewed as the backup resource that can help you set the business up and running. Just make sure you can securely pay it back on due to avoid rising interests. Have you ever tried managing a business? Did you enjoy it? Are you still currently doing it today? Did your business ever use debt as your backup resource? You can share your experience in the comments section below. This can also be used for trading stocks in the market. The borrowed money may be riskier, but it can be used to add to your own money and purchase markets that you can't originally afford. If you don't know, stocks are very explosive, meaning you can either gain or lose a lot of money depending on various factors. Number 4, increasing profits. The concept of investing is putting in an amount of money intending to grow it and gain profit. By looking at two individuals, Jake and Rick, both of them have $1,000 in their account and plan to invest in a specific business. However, Rick went to borrow $400 and added that to his investments, having $1,400 in total. If the profit, or what we call the return of investment, on a monthly basis is 0.83%, then Jake will only receive $8.3, compared to Rick will have around $12, increasing almost 45% of Jake's profit. And in 3 to 5 years, Rick will continue to have more profit compared to Jake in that investment. However, in business, as you know, there's always a risk. If you're not careful, you can also lose some or even as bad as the whole amount you invested. This happens when the company goes bankrupt. So judgment on which company you want to invest in is important. Number 5, avoiding capital gains tax. Taxes are such a pain, especially when it comes to selling properties. That is why the rich have found ways to utilize debt to avoid paying more of these charges. Imagine having lots of properties during your retirement and you want to sell them, using the money to maybe travel the world, have a vacation, or support your family. Then after selling them, you discover that you lost 20 to 40% of the profit because of the capital gains tax. This tax is charged on assets that have increased in value, including all real estate properties that increase their value yearly depending on the location. So what wealthy people do is borrow more money and set their properties as collateral. Collaterals are what we call assets to be confiscated by the lender if he or she fails to do the agreed upon terms. Meaning, without minimum payments, lenders can fully confiscate the property. Another legal way to avoid taxes is the buy, borrow, and die strategy, which involves passing down the assets to your children or family member once you die. Avoiding capital gains tax, since after passing down your assets, they will retain their current price since they have not increased in value. Debt is a powerful tool when correctly used. It can provide you your backup resource, create assets, and maximize your profits. But it can also be harmful to your finances if wrongly spent. We hope you took away something new from us. Feel free to like and comment in your thoughts down below. As always, thanks for tuning in and see you on our next video.